Hey guys, what's up? It's Chad. Hopefully you all had a fantastic week this week. TGIF, hopefully you have some really good plans for this weekend and have lots of fun. Well, let's see what happened in the market this week. Today, in fact, was pretty incredible. So the healthcare bill got pulled. They didn't even take it to a vote because they knew they weren't going to pass it. So they pulled it, didn't even vote on it, and that'll be put off for another day. And we saw the market sell off on that news. And bonds today had a little bit of a run, especially throughout the day. And then when that news came out, bonds pulled back actually. So we'll see what happens with bonds tomorrow. So as you remember, my systems are in bonds right now instead of S&P 500. So that goes along with a lot of the big players. So if you look at the commitment of traders from the last couple weeks, you'll see that the open interest in the E-mini, the S&P 500 E-mini, and also the S&P 500 regular S&P 500, not the futures. So both the futures and the regular S&P 500 are down. About 20 to 25% of open interest has come off, and so very interesting sell-off. And we kind of saw that with the positioning. So we kind of were looking for that, and that is what we got. So basically right here, this is about the time that 20-25% of open interest came off. And so we pulled back, and we're just about on our 50-day moving average right now. If you look up here on the top left-hand corner, that's TLT. That's, of course, your long-term bond ETF. We pulled back up to this line right here like we were talking about, and we stayed there. And a lot of people now are sort of getting into this trade. I even saw on CNBC they were talking about getting into TLT. So we got in several days ago, and we even were hedging this starting on, I believe, the 14th. This is the S&P 500. So we are ahead of the game. Speaking of which, just an update. Speaking of, if you look at the action in the sector weighting, you'll see that we've moved towards a defensive sector position. So the outperformers, the number one outperformer of sectors for this past month has been the XLU. So this is utilities. So you know how we go through the sectors every month on the first of the month, and we talk about which sectors outperformed and which did not outperform. So at the beginning of March, we talked about XBI, which was the number one outperformer, and right now it's the number two outperformer over the last 30 days, trailing 30 days. So it's done well for us. If you look at most of the sectors in the S&P 500, they've gone down. A minority of sectors have continued to rise over the last 30 days. So the sectors that we talked about last time were XBI and XLV. So XLV and XBI are both positive. So our system is working. Now looking ahead towards February 1st, if we're more defensive at the end of this month, then we may be moving into something like an XLU. Utilities, which are a defensive play. They're a play for income. So we will see. And a lot of times utilities are related to bonds. So if bonds yields continue to fall, then we'll see a movement in the XLU. That's what you would expect. One thing that may portend that movement, a lot of people are talking about the Russell 2000, which is right here in the top right-hand corner of your screen. And people say that this, if the Trump trade fizzles, this may be hurt the most because people are saying that the Russell 2000 may benefit the most from the Trump trade. And you can see over the last several months, after that initial pop, after the election, we've been very range-bound in the IWM, or the Russell 2000. And actually, we saw a little movement here, little tiny channel, And now it looks like we've made a little channel here because lower highs, lower lows. So we'll see. I think one thing to look for is this line right here. We may make it to that line and then continue downward. If we cross through 130, that would be big. But even if we cross through this line, which is about 133, that would be important as well. One other thing I wanted to mention is crude oil. You know, we've been following crude oil for a while. We had this consolidation pattern, but we failed, so we pulled back. And what I've drawn here is a trend line going upward all the way like that, all the way from last April. So it's about a year. We've tested this trend line twice since last April. If you count last April, really, that's 3 times. And it looks like we're going to test it again. So this is right about the 46.30 level. So that's where I'm looking for that to possibly find some support. And you can see we've hit that level several times, right here, right here. So it's not unprecedented. But we'll see. It will probably hold up there just because we've had this big down movement here. And we'll probably have a little bit of a retracement before possibly breaking through that line. But anyway, hopefully you guys get to forget about trading for a little bit over the weekend, and we'll see how we open up with the futures on Sunday afternoon. Until then, hopefully you guys all enjoy yourself. Get outside. It's almost springtime here in California. It's been pretty sunny and warm. Hope it's the same where you are. All right, guys. Have a good one. Bye-bye.